Good morning, good morning, good morning. It's October the 22nd and it's a Tuesday. I'm continuing to feel better. Unfortunately, I appear to have developed insomnia. So I've chosen violence this morning. So welcome in, Mr. Brown. Just going to
Morning, Ryan.
receive my rod. Oh,
Good
hello.
morning, everyone.
Morning. Let me quickly do
Can
the
you
legals. Well, yeah.
can you just be ill again?
Oh, mate. Yeah, I've got to be in my bonnet about this London
Oh,
economics or economics fucking article. One sec, let me do the legals. Nothing discussed on this space session constitutes trading or investment advice or infers any kind of endorsement by PIQ Global Limited. Trading is PIQ or PIQ Suite, and that includes the hosts, Mr. Michael Brown, and myself, Mr. Ryan Paisley. Just for heads up for everyone. So there was a one of these Joe fucking lads mad things, whatever, the social media lot. They've got a thing called the London Economics, which is a very left-wing kind of take on what they think London works or how it works, how the city works. It's always full of bollocks. And they're claiming from a interview with the Lord Mayor of London that the City of London has lost 40,000 jobs since Brexit. Now, as I can see a few people on here, like Mr. Richard Bernard and James Straubs and Sam. I saw a few other people, and Big Chris is there as well. We've been in the city many, many years, decades, in fact. And I think between us, I don't think one of us knows of one single person that's lost their job or been forced to move. I know people that have been trying to poach to France, and they've actually turned it down because it's France. And all this bollocks about talk when they say about clearing having to be moved and stuff. Look, as Michael will tell you, I traded some products that weren't based in the UK. They were based in the US. They were cleared in the US. That did not mean I had to be in the US to trade it, nor did my back office. Anyone that says that because you're trading something that's cleared in a foreign country means that you need to be based out there is talking rubbish. It's the best litmus test to discover if people know what they're talking about. And they do not know what they're talking about. Oh, anyway, sorry, I've got that off my chest. Oh, I'm gonna have to turn that into Ryan's rants, aren't I? Oh, bugger. Sorry, I'm done. I'm done. I'm
are you
done.
happy now?
Oh, a quick word from our sponsors, Zishi. Well, I say sponsors; they're just good friends of ours. And I said I'll give them a shout out. So Zishi are, funny enough, owned and run by two ex floor traders. Which nice little segue there. Zishi are a very, very high end training company for financial markets and trading positions and financial wealth management positions and stuff like that. I will post up a thing in a second into the Jumbotron. But yeah, it's very, very worthwhile checking them out if this is the kind of route you're taking. They're not cheap, but they're very, very good. And they're all done in accordance with is it ACAS, whatever it is? So all done with University of Bath and really deep, deep ties with ICE, the Intercontinental Exchange as well. So big shout out to them. And if they're listening, you owe me a beer. Anyway, go on, carry on.
Fucking hell. Anything else?
Give me a minute.
I'd rather not the way this is going. Right, good morning, everybody. Back to normal, regularly scheduled programming now in the markets yesterday. A bit of a risk-off day, actually. The S&P 500 ending the day around 0.2% lower. Most major indices seeing a move, a bit of a lurch to the downside. Although it must be said that there wasn't really anything by way of significant data or news catalysts to spark that move. So perhaps just a little bit of de-risking coming in, as we were discussing yesterday, ahead of what is a very, very busy couple of weeks from next Monday onwards, including, of course, the presidential election on the 5th of November, as well as the October jobs report on the 1st and the next Fed meeting on the 7th. So it's a little bit difficult to explain away some of the moves that we saw yesterday. There's also, particularly in terms of what we saw in the FX and in the fixed income spaces, where the dollar rallied north of the 104 figure and the 200-day moving average for the first time since early August. That move was almost solely due to the sell-off that we saw in the Treasury complex, with the 10-year rising by about 10 basis points on the day. And this morning, trading north of 4.2% to its highest yield since late July, with the curve continuing to steepen. Some have been talking about this potentially being a so-called Trump trade coming back into the market. Personally, I'm a little bit skeptical of that. I think a lot of what we're seeing is these sort of dual axis charts, where on one side you've got the dollar, on the other you've got oh, Ryan, you'll know the name of it. This crypto betting thing.
Polymarket or Kalshi, one of the two.
Polymarket, that's the one.
Funny enough, you can actually get the odds, the presidential odds for the Polymarket on PIQ Suite. It's one of the little widgets that we got on there.
Well, there you go. The thing to bear in mind with those odds is that most people in the US can't actually use that site to bet. So it is worth bearing that context in mind when trying to extrapolate conclusions from the pricing that we're seeing there. In any case, other markets yesterday, we saw a little bit of upside in crude, with WTI up about 2% on the day, giving retracing some of the losses that we saw on Friday. And gold actually ended the day unchanged, but we did hit fresh all-time highs on an intraday basis, north of $2,700 an ounce. In terms of catalysts, as I said, there were no real notable data releases yesterday. There were a few headlines doing the rounds, but I don't think any of them were particularly impactful, to be completely honest with you. Just to run through them in brief, the UK, we have this new workers' rights bill that is coming in, that's basically going to make everyone join trade unions and allow people to request various luxuries in the workplace, such as working from home from the first day of their employment. According to a civil service impact assessment, this is going to come at a cost of £4.5 billion every year to the UK economy. And of course, this is coming from a Labour government that is supposedly going for growth. Unsurprisingly, small and medium businesses will be hit the hardest by these new measures. And of course, these new measures are certain to pass, given the 170 odd seat majority that the Labour Party have. And of course, this comes ahead of the budget next Wednesday, of course, on the 30th of October. Plenty of central bank speakers on the wires yesterday, and we've got even more coming up today. To be honest with you, none of them said anything particularly impactful. The three ECB speakers that we heard sticking to the data-dependent script, all of them saying that the December decision is open and that we'll have plenty more data by then. Let's be honest, we all know they're going to cut by 25 basis points at least in December. Anyway, we heard from a couple of 2026 Fed voters, Logan and Kashkari. Again, neither of those saying anything of particular interest. Although we did hear from Laurie. What?
GTC. That's GTC comment.
Yes. Yeah. Sorry. We did hear from. Well, I said we did hear from. I thought that was someone's initials for a second. We did hear from Dallas Fed President Laurie Logan, who used to run the markets desk at the New York Fed. It was interesting that she was talking about how quantitative tightening is not at, and I quote here, cross purposes to rate cuts. For those who are unaware of the context behind that comment, the Fed obviously they delivered a 50 basis point cut in September, probably another 25 to come in November and in December. That is engineered to make policy less restrictive. At the same time, they're running down the size of the balance sheet, which is in effect making policy more restrictive. So Logan was talking about how there is not necessarily that perceived trade-off between the two main policy instruments. And we also heard from the BOE's Megan Green yesterday. She was, again, sticking to the script, cautious and gradual approach to easing is appropriate, although note that Green has not actually yet voted for a rate cut. She was one of the 4 dissenters at the August MPC. And Chief Economist Hugh Pill was on the wires this morning. He wrote a letter, very strongly worded letter in true British fashion, to the Office for National Statistics, basically asking why their labour market data is not worth the paper that it's written on, and why it's taken them almost 2 years and they still haven't managed to solve that problem. One other thing is, and you may be about to mention this, but we did see European car sales. They fell by about 4% in September. So it seems like the auto industry on the continent is still struggling to get out of first gear.
Oh God, that's the only reason you said that headline.
It was, yeah.
Yeah, I can. Before you even started laughing, I could picture your little grin on your face. Yeah, I tell you what. I didn't have that exact headline, but on that headline, just a little fun fact to add to that. New hybrid cars sold in the EU in September accounted for 32.8% of total new cars, overtaking petrol-powered vehicles for the first time. Obviously, the rest I'm gonna guess was powered by diesel, or coal. So yeah, a little fact on the back of that for you. What have we got? What am I doing? Right, yes, some headlines via a mix of headlines via our friends Andrew Hart from Northern Trust. I'm not sure if I'm allowed to say that. Apologies if
I
I've
was going to say,
slipped
I'm
over.
not sure you were meant to
Oh
say that.
crap. Oh crap. Take that bit out. And obviously Zach and News Squawk. Where to start? Okay, buybacks. Goldman Sachs have noted that November is historically the largest execution month of the year, with 10.4% of annual spend in buybacks. They estimate, Goldman Sachs estimate, that $960 billion worth of executed buybacks in 2024, or plus 100 billions worth of share repurchases in November. This is the equivalent to 6 billion worth of daily VWAP demand in the 19 trading days of November. Also, during the lower volatility days in the late Thanksgiving vacations and elections and Fed and all that stuff. So, could be in for a wild ride in November. There's one for you. On gold, sorry, one sec. Oh God, it's still there. In gold, obviously continues to make new all-time highs. We had a note from Citi yesterday. Citi Research raised its 3-month gold price forecast to $2,800 an ounce from 2,700, and they raised the 6 to 12-month forecast price to $3,000 an ounce. If I wasn't bearish before, I probably am now on the back of that. Citi also raised its 6 to 12-month forecast for silver to $40 an ounce. Taiwan exports, September export orders rose 4.6% to the US, which equated to 53.79 billion versus an estimated 6.8, so missed on the estimate, and down from August 9.1% expansion. Orders to the US were up 8.3%, to Japan 9.8%, while Europe they shrank 4.2%, and they shrank to China by 3.6%. You mentioned Polymarket, and that's how I'll wipe that off. Measures aimed at curbing US investments into China in sensitive technologies such as AI and chips, something we mentioned yesterday, and my fear that because I don't know how to say please and thank you when I type to Chinese AI, I might be a minion. This is reaching the final stages of review by the US government, apparently, according to CNBC. So we could be seeing some headlines on that. And as always with these things, expect to see much tit for tat in terms of relations with China. Speaking of share buybacks, which I spoke about earlier on, this is from the FT. Share buybacks on mainland China's biggest exchanges have soared to record highs this year. We're sticking with China. Central Huijin Investment Limited, a unit of China's sovereign wealth fund, has at times bought equities to stabilize the stock market. It's been announced, and they've issued bonds to fund this and push its local debt sales this year to a record high. Chinese youth unemployment rate dropped in September to 17.6% from 18.8% after hitting a seasonal high during the summer. On this, for those that can remember, and Michael, tell me if I've remembered this wrong, but I'm pretty sure
Probably.
there was, thank you. I'm pretty sure that there was, forgive me if I'm wrong, but there was a professor or something, a Chinese professor came out and said the actual true number is something like north of 50%. He then disappeared, and then China stopped producing youth unemployment data for a quite significant amount of time. So, as always, Chinese data, we know one thing about Chinese data, it's bollocks. It's made up, sorry, it's made up. Clean language show nowadays.
I
We'll go
don't know
for it.
about the. I don't know about him disappearing, but you are right in that they did just decide to stop producing the data,
Yeah.
presumably because it was utterly terrible.
I mean, when you can't even fudge it, and even when you are fudging it, it's 17.6%. That's not great, is it?
No.
Um, no. sticking with China, there's a lot of Chinese headlines today. China is on track to import record volumes of iron ore in October, increasing the divergence between the demand for the steel raw metal and the steel weak output. There's been quite a bit of talk about hoarding and all stuff like that. Yeah, so one to keep an eye on. Finally, we got to say something about the Middle East. Couple of things. One, I haven't actually got it in front of me because I forgot to copy and paste it onto my notepad. But there was quite an interesting thing yesterday where the Israelis basically told the Lebanese people who, have no money. It's a very poor situation, it's a dire situation over there because of Hezbollah's kind of running the country ragged. The Israelis came out press conference and basically told the Lebanese population where Hezbollah was storing hundreds of millions of pounds in dollars in gold and hard currency, which I thought was a really good little thing they done. So yeah, we've also seen reports of the Lebanese army kind of coming out onto the streets and flogging Hezbollah. Again, I don't know. People are going to tell me that I'm just relying on propaganda or whatever, but it's all propaganda from either side, but something to keep an eye on. I thought was quite interesting. But something that is more factual. Israel's Channel 14 came out and said that the assassination attempt on Israeli PM Netanyahu, if you remember, a drone was flown into his compound whilst he was there, apparently. This will factor into their Iranian response, which we're still waiting for. And
Israeli response.
yeah, what did I say?
Iranian.
Oh, sorry, Israeli response. Yeah, that'd be the one.
Really don't want to get those mixed up.
Oh God, yeah. Can you imagine? Ugh. Have I ever told you the story about when I was strip search trying to leave Israel? That's one for the pub. Anyway, moving on. What's happening today, my friend?
Yes, I think it's probably best if we do move on from that one.
It wasn't out of
Sadly,
choice. It wasn't. Sorry, it wasn't out of choice. It's not like I just dropped my trousers in insecurity.
this story's getting worse. Just stop
Sorry.
talking.
Sorry.
Right, in terms of today, sadly, I haven't got much sort of meat on the bones here
Oi, oi.
to move things on
Oh
from that.
God.
It is a relatively quiet data docket once again, in keeping with the general theme of the week. We've only got one notable release, and that comes at 3 o'clock this afternoon with the Richmond Fed manufacturing survey. The survey expected at -17 for a prime -21. Yes, it does help to shape expectations for the ISM manufacturing print that we get in a week or so's time, but on its own, it tends not to be a market mover. We do, though, have a plethora of central bank speakers on the docket today. We hear from the Fed's Harker. We hear from 7 members of the ECB's Governing Council, including President Lagarde, and 3 members of the Bank of England's Monetary Policy Committee, including Governor Andrew Bailey, who will be speaking around about 2:30 this afternoon.
On that, myself and Arno, Capital Edge, are doing a preview for Bailey's keynote address at 10:30. So in just shy of 2 hours. Just a little
Well,
quick brief.
I don't
Go
wish
on.
to rain on your parade, but given that he's speaking at Bloomberg's Global Regulatory Conference, I would not be,
Look,
setting an
I
alarm
just
and
needed.
staying up for that
Look,
one.
I'm not. I'll be the first to hold my hands up. I needed to get some content with Arno. So there you go. And that's what he chose. And that's what the boy wanted to do. So who am I to argue? I'm just going to sit there and
Well,
sound pretty.
fair enough. Other than that, we do have a busy day on the earnings docket. A fair few companies reporting before the market open. I won't go through them all, but we got defence giants Raytheon, or RTX as they're known now, and Lockheed Martin. We also hear from 3M. They're a useful bellwether stock just because, very simply, they make
You
lots of
love a
things.
bellwether. You
So
love
that
a
may
bellwether
be.
stock.
I do indeed. So that may be of interest before the open. Nothing really coming up after the close on the earnings front. But overall, the docket for the day ahead is again relatively subdued.
Ah, perfect. Thank you very much. Just a quick shout out to my dear friend Suzanne, who I just saw joined us, or aka Judith Chalmers. Just a quick bit, not a housekeeping, but basically a thank you to everyone because yesterday, I rarely, very rarely check how many people listen to the shows, especially on the playback, and obviously because it's a nice short structure that we have a ton more people play it back on the recording, probably while sitting on the toilet, than they do listen live. And yesterday we were just shy of 1,000 people playing this back or record or playing it in general. So I think I speak for Michael when I say huge thank you to you all.
Indeed.
This started off as just a bit of fun, and it still is. But yeah, I think we got something something little cool little show going. I just need to get some production values up, so I'm going to kind of come up with some jingles and stuff like that, perhaps. But anyway, seriously though, definitely mean it. We really appreciate it. We really also appreciate the regular listeners that we see tuning in live. Listening to me talk rubbish whilst Michael is the brains of the operation. We're still trying to work out what comedy pairing we are. Answers on a postcard. But anyway, I digress. Tune in just under 2 hours for me and Arno. Although, as Michael said, nothing really going to happen. But at least you can listen to me and Arno have a chinwag. But anyway, guys, thank you so much. We will chat to you tomorrow. If you are trading, obviously, as always, keep it tight. Cool. Cheers, mate.
Thanks, guys.
See you. Bye. Awkward silence. Du, 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 du.